Welcome back, and here we are with the CIA Part 2, Unit 3, Financial, Environmental and Consulting Engagement. In this video, we will be discussing on these three aspects of the syllabus of internal audit for CIA exam Part 2. Those who are joining for the first time, this is a brief introduction about myself. Here you can see my background qualification, my experience and my career trajectory, that how I moved in the corporate ladder. So anything which I'm trying to give you or explain it to you in this video is basically based on my knowledge and based on my professional experience of more than a decade in the field. This is a brief overview of the entire CIA Part 2 syllabus. If you look at, there are 9 units in the entire syllabus, which means 9 chapters or 9 units. The publisher which I'm following is Glim, because I personally like it because it's concise and to the point. I also try to give you an idea of how to bifurcate or allocate different percentages as per the exam number of questions to each topic. These are just an approximation, and there is no hard and fast rule that only this number of questions will come. There might be a possibility of 2-3 MCQs may increase from one section and might decrease from another, but as a whole, this is just to give you an idea. So for now, so far we have covered Unit 1, internal audit operations, then Unit 2, assurance and compliance engagement, and today in our discussion will be financial, environmental and consulting engagement. So here is the snapshot or mind map for the entire unit. So basically there are 3 sections in this entire unit. One is about financial engagement, in which we will be discussing all the key elements about what is the role of internal audit, what are the key areas that we look into when we are digging down on the financial aspects or financial matters of the company and financial reporting. Then there is a whole section about environmental engagements, which is environmental audit. These days there is a modern word, ESG, environmental, social and governance audit, which is now very much in the news or point of topic. So this is one of the area that is covered in our part of our exam syllabus. Then the third one is about consulting engagement. What are the types of consulting engagement that internal auditor can perform? What should be our role as a consultant? The best part of this whole unit is, in fact, the whole part 2 of CIA is you can use this knowledge in your day-to-day practical audit, in your field work. This is the best thing which I like about CIA Part 2. CIA Part 1 is more of building your foundation, and CIA Part 2 is about how to use that information and structured in a way that you can start applying in your day-to-day life. This is the best part of CIA Part 2. CIA Part 2 is not only restricted for the CIA qualification, you can also use it just to refresh your topics and just to see whether you are aligned with the IIA recommended approach while performing your internal audit engagements. Generally, whenever we talk about internal audit role, in terms of the area coverage, we classify those areas into financial, operational, compliance and IT related controls. So this is a 4 broad classification of audit engagement, which we have discussed in detail in the previous unit. Here we are going through again, but in terms of more detail towards one of the aspect of the 4 key element of the internal audit engagement. That is financial engagement. In financial engagement, we more or less act like an external auditor, because the techniques, the tool, even the objective of the internal audit carrying out that engagement remains the same. What we look in the financial audit, we look at all the aspect related to financial reporting process, which comprises of collecting the information, preparing the financial information statements, and disclosure related to notes. So these are the key three vital things that we look into it, and there are what we look into these areas is basically the control environment, whether the controls are working effectively, and to ensure that the management which are giving an assurance that whatever the numbers they are recording, or whatever the numbers they are presenting to the shareholders, are true and fair. So this is what we also test as part of our internal audit. Generally, the management is responsible to ensure that there is nothing wrong with the numbers. They are not misrepresenting to the shareholders, and that is being audited by the external auditor. Internal auditor, they also do the same thing, but there might be a small aspect of the engagement that we do. Just to give you an example, for example, when we might have planned in our audit engagement, let's say revenue recognition. In the revenue recognition, we will look at what were the key revenue streams, who are the suppliers, who are the buyers, how much receivables we have, what is the aging process. So we will be digging down in terms of recognition of revenue, the timing of recognition of the revenue, will there be any bad debt. So these all aspects we will be looking at, but in specific, there is one area that we cannot miss out, is the financial reporting process. So whenever the management is putting forward any numbers associated with revenue, be it in terms of receivables, be it in terms of any bad debts or any other provisions, that needs to be accurate. And to ensure that, we follow the same step as the external auditor does. But just because external auditor does not have too much of time, or sometime their focus is only on reporting side, we look into overall holistically, but then we dig down and we focus on the nitty-gritty detail as well. The management either implicitly or explicitly give an assurance that the measurement, presentation, and disclosure of the financial statement is true and fair. So this is their job, or this is their duty. They in order to give that assurance, they provide certain assertions. We call it audit assertions. What are these assertions? These are basically certain attributes related to a transactions that they ensure that this transaction has been occurred, which they have recorded. They have completely recorded, so there is nothing missing out in terms of the transaction, maybe in terms of the entire amount. The numbers are accurate. That the cutoff is basically a concept in which we say that generally there is a financial reporting period. So let's say if it is start from January 1st and end 31st December, so we will try to take a cutoff on 31st December of that transaction. We will not continue anything that correspond to or falls in the subsequent year. So that is a cutoff. And this generally applies in terms of financial transaction when we are making, and we also in inventory take as well. Then existence of that transaction or that assets, which if for example we are looking for physical assets, so existence of that. So there are certain kind of these assertions which the management either implicitly or explicitly assure that they are all there in order to ensure that the statements are prepared true and fair. What we as an internal auditor do, we test those assertions. So we will take those transactions, we look at all the attributes. Does all these attributes fall there, or being or accurately reflected and recorded? And if it is okay, then it gives us the assurance that the design of the control and the application of that control both are in a healthy manner. If there is any deficiency, either in terms of not recording the complete transaction, so we have to look whether there is a design problem with the internal control, or if they or bypass that control, or they did not use that control effectively throughout the period of our audit. So this is a brief nutshell, and there are more aspects to the financial engagement which we will be discussing the next slide. In terms of risk towards financial statement, we could have risk of revenue overstatement. This is a very common, where management foresees certain kind of a sale, or they made a sale, but the risk and reward of that, it's a technical thing that in accounting, the risk and reward needs to be transferred to the seller before you record the transaction. So if that is the case, that the risk and reward has not been transferred, but we recorded the sale, or maybe we recorded a sale as a future commitment towards making that sale. So there are certain accounting IFRS rules that we have to take into account and ensure whether the management does not overstate the revenue. Why the management would like to overstate? Obviously, to bring the numbers more favorable to the shareholders. Expense understatement, this also happened. One of the very common example would be that to capitalize the expense. So you make a daily routine, it's small here and there expense, but you capitalize as an asset. So when you capitalize an expense as an asset, then the expenses reduce. So this is an understatement of expenses, again to give a positive picture of financial statements. Applying unreasonable accounting estimates, this happens sometime that we are using, so in IFRS or in the accounting standard, we have the provision to use certain estimates, and certain the standard give us some kind of flexibility to evaluate our situation, and then use as as per the industry practice, or as per the whichever is more favorable. So sometimes they can use that area and use the estimate which will result in more favorable result to them, or to the reader, rather than the one which is supposed to be used. So this is also one of the area that could lead to a high risk. Applying outdated accounting principles, so there is a change in the accounting principle, but they are still using the old, in which they are non in compliance with the IFRS or international accounting standard, leading to overall misrepresentation of the financial statement. So these are the key risks why internal auditor or external auditor both are very much concerned about the financial audit. Whenever we are doing a financial audit, we as an auditor, we classify into different accounting cycles, different processes, because it's much more easier for us to track a process from initiation to end. So one cycle could be sales receivable to cash receipts. So basically, when you made a sale, you will start the process from there, then till the time you book the receivables, and later on when you receive the cash from the customer. So you will look at the entire cycle and all the key activities that are involved, and how the accounting and recording has happened, and as per the IFRS or not. So this is one cycle that could be audited by the internal auditor. There could be other, just such as purchases, payables, and disbursements. Again, from raising a purchase order, or having a purchase agreement, or having a receipt requisition to procure something, to making a purchase order, then recording the accounts payable or liability, and then finally making a payment. So this is another cycle. Then production to conversion cycle, so starting from having that raw material turning into a product, and then taking it through the production cycle, and then turning into a final product. So that could be one. Financial, capital, and payment cycle. So this section basically comprises of our investment in treasury related matters, investment, stocks, debt, interest payment, dividends, how the company is dealing with these areas. Personnel to payroll, so how the payroll or the wages or salaries are being made. External financial reporting cycle. External financial is the overall recording of the entire transaction throughout the year, and then how they put forward that into a trial balance and ledgers, and eventually in the form of balance sheet, income statement, changes in equity. So these all statements, how they make it. This could be in itself audit engagement area. So internal auditor might not be doing a holistically overall review of the entire financial statement, because generally that is being carried out by the external auditor. But sometimes what we do, that we go into detail and pick one area or two area, and then we carry out very extensive audit in terms of looking at all the aspects of internal control and control design. But however, if an internal auditor wants to do, they can do, but generally we leverage from the work of external auditor. So this is something about in terms of the accounting cycle. One of the key reasons why we are so much fond of the financial engagements is because of high probability of fraud, and that is one of the key elements that even the IIA or IPPF standards also mandate us to look the operations or the financials matter from the fraud risk angle as well. So just to ensure that we carry out our audit procedure to ensure that the financial statement are free from any material misstatement, whether caused by fraud or error. One thing I would just like to add here, that if you have gone through the ACFE, Association of Certified Fraud Examiner report, they have an annual report in which they tell us about the type of the corporate fraud that is happening. One of the key areas which they highlighted, and mostly on the top of the type of the fraud, is misappropriation of assets or misrepresentation of the financial statements. The people who are at the junior bottom of the company or mid-level, they generally go for misappropriation of asset because they have more access to the assets, but their value is relatively less. But those who are very experienced and are at the top of the company, whenever they conduct or whenever they try to cheat the company, or under any pressure they have to commit something wrong, they do the misrepresentation or manipulation in the financial numbers. Maybe because they have extra pressure from the board to achieve certain unrealistic target, maybe because they want to show a very positive image and reap their bonuses in the short term. So it could be for any reason, but that's one of the areas why we are so much inclined toward looking at in terms of control environment. Assessment of internal control. In many companies, they have their dedicated subsection or a department. They call it. I remember in Telenor we were having within the finance department, we call it. It used to call financial control department. So basically what they do, they look for all the types of internal control over financial reporting, And this is a reason why a lot of SOX compliance companies which are listed in the stock exchange, in the US stock exchange, that they have to comply with the SOX compliance. They also look for to have this department in order to ensure that no issue arise as part of a SOX compliance, because SOX compliance is more inclined toward financial controls. Therefore, many companies, they have this financial control department. It doesn't mean that all the companies which have, they are listed on stock exchange, New York or US stock exchange. No, some company does just they just wanted to have it, and some companies because of SOX compliance as well. We as an internal auditor, we are not supposed to just presume that everything is happening the right way. We have to test, we have to ensure that we collect the right evidences, we carry out proper testing, and apply proper audit procedure in order to ensure that the controls are working effectively. We also have to ensure that the cost benefit analysis, because sometimes the benefit which we achieve of deploying an expensive control does not justify. So we have to look at the cost effectiveness, because we also want to add towards the company efficiency and effectiveness. There are many internal control frameworks that the company can deploy. COSO is one of the framework which is more commonly used. The purpose of these frameworks is just to give a structural approach to ensure that there are proper control environment within the company, and control are always a continuous process, so we cannot take it as one time job, that once you have implemented a control, then you dusted and you said my job is done. No, it's not the case. In terms of internal control, you have to keep on evaluating whether these controls are relevant, because these days companies are very dynamic, they change, and also the regulation changes, the accounting principle changes, the standards change, so you have to keep on changing and modifying. And that's one of the reasons why internal auditor keep on testing, in order to ensure that the controls still have the relevance within the company. Generally, if you look at the control responsibility, the chief audit executive is responsible to give an assurance to the management and to the board on the control processes within the organization, but it is ultimately the management responsibility to ensure that these controls are working effectively, and the board has a tool. Through internal audit, they test these assurance and these controls, and ensure that the overall organization is in the right direction in terms of having proper control mechanism to fight back any risk, whether internally or externally. As I've mentioned, there are many control framework that a company can use. COSO is a very common one, and we have, in part 1, we have done a detailed level of discussion on COSO internal control framework. If you are interested in going through and just having a look at, I have a separate video just for the COSO. You can look into the you can check out in my videos. You will find there is a dedicated. I will try to put it on the link as well. So COSO has basically 5 components: control activities, risk assessment, information and communication, monitoring and control environment. And the entire discussion, there is a detailed level of discussion that has been provided in that presentation, but generally these are the 5 key components where we believe that if the company can have a control over these 5 key components, it means that they overall having a robust internal control environment. Whether be it in terms of financial audit or any other audit, the general premise of an internal audit remains the same. We carried out our risk assessment from the perspective of fraud as well, and again we allocate our resources and internal auditors to perform that engagement, and especially in terms of financial audit, we provide the assurance services in terms of financial reporting, corporate controls and governance matters. In terms of financial reporting, the key areas where we look at the compliance with the applicable company's policies and procedure, code of conduct, regulatory filing. If there is a, for example, if a company is big enough that they are a listed company, so they have a regulatory filing which needs to be carried out properly with the correct numbers, and that's where we have to also carry out our test that these numbers are correct to the regulators which the company provides to the regulators. We have to look the financial matters from the risk of fraud as well. Just remember one thing, that even the same discussion we have done in last unit, I think unit 6 or unit 7 of CIA part 1, that it is not our duty to carry out a fraud investigation unless until we have the capability to carry out, and we are mandated by the audit committee that we can carry out, and it is provided that provision in the internal audit charter. However, to look at things from the risk perspective, from the fraud risk perspective, that is our duty. But just let's say we felt that there is an element of a fraud, and if we believe that we have the capability, and if there is no dedicated resources within the company, sometimes the company have a fraud to fight against fraud, anti-fraud department. If the company doesn't have, or they doesn't want to outsource, and they give us the responsibility, then we can carry out a detailed level of review. But if we lack in our competence or in any kind of resources, maybe internal audit resources or time constraint, then we should explicitly make that statement to the audit committee, and we should not accept such kind of engagement. So that is one thing which needs to be clear, be it in the from the perspective of financial fraud or operational fraud or anything related to that, so that we have to be very clear in terms of our role and responsibility as an internal auditor. Whenever we are planning for a financial engagement audit, there are certain things that we have to keep in mind. Our plan should be flexible. All the key major area of the scope area of that financial engagement needs to be covered. We should be able to be, or we should be mentally prepared that if there is any unexpected change, be it in terms of scope area, be in terms of competence that you, or additional resources that you need. There are times when the finance team is so much busy that you cannot get a dedicated resource for certain area of review. So any type of unexpected change that you should be familiar with, and you should be able to account for in your planning. Consider the relevance of other people's work, because in the financial engagement area, external auditors has performed their work. Sometimes there are regulators who have carried out their audit engagement. Sometimes the second line of defense, we have financial controls team, we have other compliance or maybe other risk management team which has carried out certain reviews, certain type of review or testing, so that we can either use it or whether we can share our information with them or not, that needs to be taken into account, and we can consider the relevance and the need and the authority to do that. But whenever, just bear in mind, whenever we are using anyone else's work, the responsibility is on us, that we have to take the responsibility for the review and giving the opinion. We cannot put our lack of audit procedures as their responsibility. So we cannot do that. We have to perform our audit engagement, but just because we want to save time and we want to make it things quickly, so in that case, if we are relying on other people's work, the responsibility still rests with us. CAE shall inform the board and senior management gaps in audit coverage. So if there are gaps, you have to mention. It happened to me that I was carrying out an expense review, but in that I felt that VAT, value added tax area, was quite extensive, and I wasn't I didn't had resources and had a time constraint, so I removed that area from my audit scope, which I ultimately informed to the audit committee. So if that is the case, you have to inform to the audit committee so they know which area you are giving the assurance about and which area you haven't touched base upon. Now we are entering in the second section of our unit 3, which is about environmental engagement. If you are keeping up with the current latest development in internal audit engagements or internal audit domain, you might have heard of ESG, which is environmental, social, and governance audit. This is an area which is these days which is in news. So environmental risk is one of the key risks that have recently been put forward by different stakeholders, by the government agencies. We believe that the organization has to be environmental friendly. The product they produce, the way they carry out their activities, because we believe that similar to any citizen, the company, the corporations are also are citizens of a country or geography. If not, if they are global company as a whole to the planet, and they needs to have a green footprint in terms of having or minimizing the waste and better serving the whole planet. Environmental health and safety related matters are very critical because it is associated with different kind of risk. There could be a bad publicity related risk. There could be a risk of having fines or penalties by different government agencies. It could also lead to injuries and death, losing customers. Governmental agencies might might request you to provide certain kind of information, and that could lead to have a detrimental impact on your business operation in terms of putting some ban or embargoes. So you have to be very much these days critical about the environmental risk. Some of the recent incidents which we have heard about, there were certain malpractices by the automobile company where the CO2 emission which they were reporting was actually less than the actual CO2 emission by the car. We have also seen incident of a oil spill in the ocean, which resulted in the or affected the marine life. We have seen there are certain mining companies which employ underage or does not provide proper health and safety into its worker. So this is all because of these kind of newses. We have to be very much mindful about the environmental risk, and this is part of our syllabus, which is very much relevant to the today's need of the time as well. So now we discuss about the risk and how to carry out the audit. The first thing which we have to understand that there could be different setup in the company or in the industry or the sector, how to deal with environmental risk. Sometime if that business is in a very high risk area, for example in oil or drilling or rigging or pharmaceutical sort of company, in that case they might have a separate environmental audit department or EHS department, environmental health and safety department, which in itself work in the as a second line of defense and carry out their own reviews and testing they perform just to ensure that the company is in compliance with all the rules and regulation, and they are minimizing any negative exposure. In that case, the internal audit that department just to ensure that the department doing their job as as it is as it's required, or as per the best practices. The second possibility would be that the CAE, the Chief Audit Executive, and the environmental coordinator in a company can work hands in hands together. How they can do: internal auditor can bring their audit expertise, and the environmental coordinator or in charge of that area could bring his area specific expertise, and they carry out reviews together in order to ensure that the risk is being managed properly. The last setup could be that where the internal auditor, which you will find in most of the company, that the internal auditor is being assigned to carry out environmental audit. Whenever we are carrying out an internal audit, we have to ensure that the residual risk of after deploying any control in terms of HEC health, environmental health and safety, any residual risk is within the risk appetite of the company, within the acceptable level of risk. So if it is not, then we have to ensure that the controls should be more strengthened, because the consequences of EHS risk exposure could be detrimental and could have a huge impact, because if the customer boycott from the product, then it could be even a disaster for a company. If a regulator impose huge fine, or if the press get to know about that incident and there is a bad publicity, that could have a huge impact. Therefore, we have to ensure one more thing, that in terms of environmental audit, we have to also work closely with the general counsel, because of legal complication in terms of reporting, in terms of injuries or death of a person, or vestiges, or contamination. So for that reason, we have to take into account the general counsel as well, in terms of whether we are in compliance with or non-compliance with any regulation or any law. There are certain facts finding on EHS related matters which is being documented by a body. They bring those as a matter of concern, that which should not be the case, but it is happening. First of all, that EHS departments work in isolation, which means they are not coordinating with other departments or internal audit or risk management. As a result, their view or their scope is very limited and restricted to that of a very specific area. However, whenever we are talking about EHS, environmental health and safety, we have to incorporate other departments as well, and look at the whole the company holistically, whether the risk is being managed properly or not. The second point of concern was that the EHS audit managers were administratively reporting to the executive, which may result in lack of independence, and the executive might not highlight the key risks to the board, so that could be one of the risks. EHS written audit reports to be distributed to senior management and above. That these reports are mainly reported to the management and might not be shared with the audit committee or risk committee, so that could be one of the concerns. However, generally it is being reported to the management, and they are supposed to take the action. Audit information is often classified confidential and subject to attorney-client privilege. So let's say if a third party, or let's say internally, if internal auditor want to reach out to the company department and want to seek out for any information, they might make an excuse that we are attorney-client, we have attorney-client privilege that we cannot share, or there could be a possibility that the company has outsourced that area, and the outsource entity might not like to share your working with us. So that we need to take into account. Because of the legal complication and reputational risk, this could be a sensitive area to embark on. In order to overcome these challenges, Chief Audit Executive or Internal Audit Department plays a very instrumental role. We can work closely with the Chief Environmental Officer in order to ensure that these risks doesn't exist, which we have discussed earlier. The reports could be shared with multiple stakeholders, not only with the management or chief audit executive, but with multiple stakeholders whoever receives such kind of report. We can also ensure to carry out a quality assurance on the EHS department or audit to ensure that they are working as intended. EHS audit program may be a certain area focus. It could be a compliance focus if that company is under strict regulation for environmental health and safety related matters. So the compliance should be the key driving force, where we ensure that all the regulatory matters bare minimum we have managed to cover. Or if it is not the case, we can also look into a system based driving force for EHS. System means that where we have environmental management system, where we look at how the data is being collected, how the data is being produced in terms of environmental matters, how the recommendation or issues is being highlighted, what are the key recommendations that is being proposed, what is the implementation plan, what is the corrective action plan. So the entire system of environmental management system, where we can review the whole system. The third could be a combination of both, where we look the EHS from a different angle within the same engagement, from compliance, from system, and from the risk or from the fraud aspect as well. Environmental auditing organizational should establish, ideally they should have environmental management system. Basically it could be any automated or a manual system in which they know how to manage the inefficiencies in terms of environment, health and safety, waste management, carbon emission, injuries, bad quality of product, employee health and safety. So this is all where it should be taken into account in that system. There are generally certain type of environmental audit that we can focus on. We can focus through compliance, we can focus through environmental management system. From transaction, there could be a big transaction that we just want to review how the waste is being treated, how the waste is being how the storage and disposal of certain kind of material is being happening, especially companies which deals in different type of chemical products, where the exposure of those chemicals to the environment could be detrimental. In there, our main focus could be storage and disposal of certain kind of chemicals, pollution prevention, and many other ways of where we can focus the environmental audit from a different perspective. The third section of our today's unit is about consulting engagement. So in the first section we discuss about financial engagement. In the second, what do we talk about? We talk about environmental engagements. And the third one is about consulting engagement. This is very much important, this area of consulting engagement, because there is good proportion of audit activities that we perform under the umbrella of advisory services, and consulting and advisory is basically the same thing but different terms we use. Why we want to have those advisory assignments is because we want to add value to the organization and improve the organization governance, risk management, and control processes. In consulting engagement, we work as a consultant, which means that we try to help the management to overcome certain or to find a solution to a problem. We might act as an independent assessor, we might act as an expert, where we give them different options, and eventually it is their responsibility to opt for any recommended solution, or to come up with their own solution. So how this consulting assignment helps the internal auditor? First of all, we get a good we build a good relationship with the management by providing such kind of services. We are being more welcomed by the management because they do not consider us as inspector, but rather helper to fix certain kind of a problem. It does not preclude that if we are doing a consulting that we cannot carry out other investigation or other type of compliance reviews or anything. It has its own domain. The consulting has its own, and the assurance has its own. So that we have to keep in mind. Again, whenever we carry out our consulting engagement, we have to ensure that it doesn't impair our independence. Independence is impaired when we are asked to assume or to take the management responsibility and to make a decision on management activity. So that we do not do. We give them a suggestion, and it is up to them whether they want to take their decision, or they want to reject or take it, whatever. Whenever if you are in a setup where you are being asked to carry out the consulting engagement, then that provisions need to be reflected in the internal audit charter as well, and that internal audit charter needs to be approved by the audit committee or the board of the company, because they should know that you are not only there to provide assurance services but some other services as well to the company. There are many benefits to internal auditor as well. When we carry out a consulting engagement, it helps us to focus in our audit engagement on the areas which we believe which become more prominent or eminent to us in our consulting engagement, that these are the key areas which we can be more focused toward. Because whenever you are doing a consulting engagement, you will be bombarded with a lot of information by the management, generally, which is not happening when you are doing the internal audit engagement, because they are more defensive. But since here you are to give them or guide them on their own problem, so they are more willing to open up, and in that case you will be more have insight to different areas within the business. And so if you are intending to carry out an audit plan, you can focus on the areas which you believe at the advisory engagement, which you felt that there could be a high potential risk or possible issues in that area. So that's how you can leverage from this consulting engagement and apply your knowledge or insight in different processes into your assurance or other maybe a formal investigation and other kind of assignments. The consulting engagement basically addresses a specific issue, the managerial issue which they have, and they want to seek out our advice because they believe that we have much more knowledge from the risk and internal control perspective. I will just give you a quick example that one time I was invited by the employer or that client, and where they asked us that they wanted us to review certain process within the company from the lens of fraud risk. So they felt that there are certain loopholes which might expose the company to any fraudulent activity. they didn't had it any case, but they were just wanted to take their preventive measures, so tomorrow there is no potential damage to the company. So they ask us to review and carry out tests in that area and see if there is any control weaknesses, and we perform our test and we look at the entire workflow and entire process. We entirely review the process, system control, and we came to know there were a number of areas where there were control weaknesses, and eventually if the company would have not addressed those issues, there might be a possibility that someone take the benefit and can harm the company financially. Whenever we are planning for a consulting engagement and we know that this is the area where we will be helping the management, we should take that engagement as a formal engagement and put in our audit plan. Why? Because we have limited resources, we have limited number of auditors, and we have time constraints. So we want to give a holistic view to the audit committee, to the board, that how we are utilizing our resources, be it assurance or consulting. So we have to give that information to the audit committee or to the board in the audit plan. Sorry. Again, we have to refrain from taking any management responsibility. We can leverage the information which we receive in our consulting engagement for audit and assurance engagement, or for evaluation of certain organizational process. So this is overall key crux of the entire consulting related engagement, and where we can play our role and how we can benefit, or where the management can benefit, and what are the limits and boundaries under which we can help the management in terms of any consultancy or in terms of any advisory services. We as an internal auditor have to take certain safeguard whenever we are trying to, or whenever we are intending to accept any consulting engagement from the management. We have to ensure that our independence and objective is not impaired or compromised by telling them that we will not take any management responsibility. We will recommend them, but whether to accept that recommendation or to reject that recommendation is absolutely management call. We have to ensure that we have the required skill set, competence, resources available to carry out that engagement. If we believe that we are not competent or we do not have the required resources, then we shouldn't be accepting that engagement. The scope of work in that consulting engagement should be a very logical one, where it should have a proper refined scope in terms of what is supposed to be done or what is the objective of the engagement, and that needs to be monitored throughout the engagement, that whether are we on the track, have we achieved the objectives or not. The results needs to be communicated formally. Documentation is very much important. All the documents or working papers that we have developed or carry out needs to be properly preserved, because we take it our consulting engagement same as our audit engagement, in a very formal way. And eventually, if there was any action plan or certain action that the management is agreed to take and implement certain controls, so we can carry out tests in order to ensure whether these actions has been taken into account or not, and the controls are being implemented or not. So that monitoring we can also perform either periodically or maybe at a specific point of time, where we can test and report on the corrective measures and the status of the corrective measures to the senior management and to the audit committee. There are different types of consulting engagement that we can perform. We can have a benchmarking exercise where we can look the department or services of the company from different angle. We can carry out competitive benchmarking where we compare our company services or a company, let's say HR department, with a competitive HR department, or a certain aspect of the company, let's say ERP implementation with a competitor ERP implementation. Such kind of benchmarking we can perform as an auditor. We can carry out a process or functional related benchmarking where we compare departments. Strategic benchmarking where we look at our strategic goals and how our competitors are intending to move in terms of strategic matters. Internal and generic. Internally will be where we compare one department with the other department, though their function might be completely different, but the way they have organized, the way they have deployed systems, the way they have developed the policies and procedures. So we can do internal benchmarking in terms of good quality assurance exercise. We can have a generic benchmarking where we compare, not to be very specific with any competitor or department, but we just compare generically certain aspect of one department with the other one. So this is how we can do through different perspective the benchmarking exercise. Other type of consulting engagement could be internal control training. We can provide due diligence to the company, due diligence auditing. I have done that. So I was working in a private equity firm where there were whenever the company intend to go for any acquisition or purchasing or buying a company or having a venture with the company, they carry out legal, financial and technical due diligence. So I have audited all that area, whether the investment, before the investment, the management has carried out that investment due diligences and they have reported properly or not to the investment committee, and the board has approved accordingly or not, and the results of those due diligence has been incorporated or the recommendation has been incorporated during the investment process or not. So this is the area where internal audit can play their part. Business process mapping. This is again I have performed where we have mapped the business processes for a company for which I was not responsible for audit activities, so there was no issue of impairment. System development reviews, again, that we can perform. I have reviewed the finance system, ERP system deployment, and have to look at from the SLA and the best practices whether we have deployed the system within the time frame, the cost benefit is being evaluated, the procurement process of or onboarding of a third party for implementation of that system, the migration of data, the controls, everything. So that we can perform. Design of a performance management system. So this is we can do that, how the company measure the performance, be it product, be it employees, be it of any services, so that we can also perform. So there could be a multiple types of engagement, consulting engagement, but all you need to know is to know your boundaries, that you should refrain from having any engagement which may lead to taking you a management responsibility, because eventually it will lead to objectivity and independence issue. Also, you have to ensure that you have the required skill set and resources whenever you are carrying out the consulting engagement. The depth, the width of the scope area needs to be taken into account in terms of consulting engagement. The best part of the consulting engagement, which I like, that it reflects our soft image within the company, and the company people start becoming more open to internal audit. And I have seen from my experience that whenever internal auditor carry out an consulting engagement, there are more departments within the company who reach out to internal audit. Sometimes they even reach out for audit activities. They say, we heard a lot of good things about internal audit, and the other department has benefited from your services. So I would like to know that if you carry out maybe an advisory or maybe an audit engagement of certain area of our business, and to ensure or to give me the perspective, generally the head of the department, they come up that what's going on there, because the companies are very huge, and sometimes the head of the department are managing tens or hundreds of people, so they do not have the insight on certain areas, so sometimes they reach out to internal audit. So this is a great avenue, and this is one of the key responsibility, or the aspect of the work of internal audit. So we have to take into account from both from the academic perspective, from the literature and concepts, and from the practical perspective, how to apply that concept into our day-to-day audit activities. Here we are at the end of our presentation, and I wish you good luck in the preparation of your part 2 CIE exam, and hope to see you in the next video. Till then, please take care of yourself and the people around you. Do not forget to like, subscribe, and share with other people so they may also benefit from these videos.